CGDV dominated with 92% over 5 years, but IXUS just flipped the script with 35% this year. IXUS crushes CGDV with a 12-point gap this year, completely flipping years of CGDV's previous dominance. CGDV's 92% return nearly doubles IXUS at 48%. That 44-point gap shows real long-term dominance here. CGDV crushed it with 89% over 3 years. That's 33 points ahead of IXUS's 56%. Complete medium-term dominance. CGDV won the marathon while IXUS just edged out the sprint. It's like comparing endurance racers to drag racers on completely different tracks. CGDV's Sharpe ratio of 0.9 crushes IXUS at 0.3. That's triple the bang for your risk buck. CGDV's still winning on risk-adjusted returns, but IXUS is closing the gap. This advantage won't last forever. IXUS flipped the script, jumping to 1.8 while CGDV dropped to 1.1, now delivering better risk-adjusted returns. Think of Sharpe ratio like your car's fuel efficiency. Higher numbers mean you're getting more return for every gallon of risk you're burning through. CGDV's Sortino ratio is more than double IXUS's. You're getting much better protection when markets drop. CGDV's downside protection is winning here, 46% better than IXUS at managing losses over 3 years. The Sortino ratio is your storm shield. It only cares about downside risk, ignoring upside swings. Perfect for measuring how well you're protected from losses. CGDV's 22% crash versus IXUS's 30% drop shows real downside protection when markets turn ugly. CGDV bounced back in 8 months while IXUS took 19. That's resilience that really matters during downturns. Recovery time matters when markets crash. CGDV got back to racing speed in just 8 months, while IXUS took 19 months to recover. That's resilience. That 0.25% gap means CGDV costs nearly 5 times more annually, compounding into serious money over decades. CGDV's fees are 5 times higher, but its superior returns have more than made up the difference historically. CGDV's crushed it long-term with 92% 5-year returns, but IXUS flipped the script recently with 35% versus 23%. Plus, CGDV protected better during crashes. CGDV's higher fees are like losing more couch change each year, but if you're chasing bigger returns, sometimes you've got to pay for performance. CGDV's betting nearly double on tech at 27% compared to IXUS's 15%, chasing that growth potential hard. CGDV's tech concentration delivered that impressive 92% 5-year gain, while IXUS chose diversification over explosive growth potential. CGDV's loading up on tech like it's the best topping, while IXUS plays it safe with balanced bites across all sectors. IXUS delivers 3.1% yield, while CGDV's dividend focus manages just 1.3%. That's a pretty ironic gap right there. CGDV's dividends jumped 33% versus IXUS's 20%, prioritizing tomorrow's income over today's yield. Think of it like choosing your race strategy at the finish line. IXUS delivers cash now, while CGDV is betting on bigger dividends down the road. The victor here depends entirely on your timeline. CGDV dominates long-term, while IXUS owns recent momentum. CGDV targets patient growth seekers, while IXUS serves conservative investors who need income now, and want broader safety nets. CGDV's the sports car, fast and thrilling on open roads. IXUS, that's your reliable minivan, comfortable, steady, gets the whole family there safely. And with that, we've covered the legal stuff. Now you're ready to invest smart. Subscribe for weekly battles with real data that show you which funds actually win the fight.